Right, hello and good day everybody. It's going to be my second episode of talking about ICT concepts in crypto and how I use them and how I study them and how I think about them when I am looking at this chart. Alright, so I've just got a few annotations on the screen at the moment. I'll just kind of walk you through the main narrative of the last 2 days, and I'll just point out something that I was talking about yesterday and how it if sort of played out and what happened from what from yesterday when I was thinking about these type of things and explaining them to you guys. Right, so narrative essentially starts when we take out Monday's high, right? When we take out Monday's high, we create this long-term high, okay? That is the general criteria for the creation of a long-term high, is when we take out a previous significant high, okay? We made our way down in the process creating an imbalance, which was here, outlined by the fair value gap, right? As a result, we expected some sort of return, at least to rebalance and create essentially what would become the intermediate term high. Because the intermediate term high is classified at a rebalance. Okay, when we rebalance something, a fair value gap, a sort of longer term dealing range, that that swing that is put in is classified as an intermediate term swing. In this case, intermediate term high. Right, so that was the intermediate term high I'm referring to. Right, so as yesterday I was talking about taking out and rebalancing this particular area, and then we were making our way. I thought we were making our way at least to these equal lows where we had resting sell side liquidity. So eventually that's what happened, and we stopped just about to the 5-minute fair value gap. You guys can have a look on your own charts that that 5-minute fair value gap is there. You can have a look. And all right, now this is the part where I thought what was a bit interesting. When we eventually took out the sell side liquidity into the fair value gap and made our way back up, we started doing something quite interesting. We started putting in these equal lows. Okay, this was the first sell side telltale sign that price was likely to go lower than the later on in the day. Essentially because we started doing what? Right? There was an engineering of liquidity beginning in the marketplace. Something that, and that liquidity was going to be attacked later on in the day. And essentially that's what happened. We put in the equal lows, and just before 7 o'clock, um, before the new kill zone, we make our way up as the Judas swing, and at 9:30, right on time, the real move begins, right? And the real move is fueled when it comes down and takes out the resting sell side liquidity over here, right? Under here and under here. So it attacked this liquidity with a lot of volume, and the preceding liquidations caused a further rundown. All right, so that is quite basically, I think, the narrative for this range. And right, so I think that's basically what is the narrative. I hope people understand a little bit of, I think, the logic that goes behind manufacturing certain price moves in the market. Just to know, I don't think I pointed this out. So this was the short-term high, because we had a long-term high, we had an intermediate-term high. We were also suspecting that a short-term high to be put in. And why aren't these two areas short-term highs? It's because they're not within the necessary dealing range, right? They're not within a premium. They are still within a discount, so they can't be considered. They're above the 50% threshold, right? So they're in discount, so they can't be considered short-term highs. And that is also why a short would be taken up here, is because this is in the premium, right, of this dealing range. And it comes into the order block, right? With this, I mean, these are the things that you got to be looking out for. All right, and anyway, where we stand now, Monday's low. We literally hit Monday's low at the moment, and we got a bit of a move of Monday's low. As it stands now, in terms of what's going to happen, what we're thinking about happening next, it's it's essentially to wait and see where liquidity is going to be resting, where the market wants to engineer this type of moves. That's just going to take a bit of time to. Um, we just have to let the market pretty much show its hand at this point. There's no reason to really jump into anything right now. Anyway, I hope everyone enjoyed that, and I'll see you guys probably tomorrow. Thank you.